In this Bitcoin portion of this live stream, I'm going to let you know more macro signals in a continuation of my last YouTube video. So if you're watching the recording of this, I strongly suggest to watch my previous video because I give you very specific things and why that doesn't mean continuation. So I'm not going to recover all of that, but rather I'm going to give you some other thoughts to work with to keep you a little safer from both a trading perspective and a Pokemon card, not financial advice, Pokemon card investor standpoint, which that means DCAing, right? DCAing, if you're somebody who doesn't like to click around with their money, but DCA into crypto, altcoins, Bitcoin, whatever. It's this video will be pretty good for each of those parties because it could greatly affect you. And again, I cannot stress right now, Bitcoin is at a very pivotal juncture. Whatever happens, whether it's a fake out or not, or continuation, it's going to be volatile. And even if you see volatility one way, it really could swing back the other way, and I'm getting ready to show you why. And it's all connected to the stock market. Bitcoin follows the stock market, and Bitcoin is being propped up right now, and it's not going down as the stock market is making yearly lows. So let's dive into this, and I want to prepare you from a macro perspective. So I'm not going to dive into the small time frames. So new people, this is a perfect video for noobs who are, I guess, unaware without knowing it. This is a perfect video for them to say, oh, it could go up, could go down, could go sideways, great analysis. This is going to be a perfect video for that, but most returning viewers are going to already know why that's valuable, and I want to prepare you for that without making specific guesses, but I will let you know what I think is probable. So let's go get it. And again, in 2017, when I was new, in early 2018, I also thought it was stupid when I heard the few TA people, because almost everybody back then on YouTube was the news, like just pumping altcoin, right? Just telling their viewers what altcoins are going to pump after they already bought it. That's all that was happening in 2017, and were very, very, very few analysts in 2017. Good ones started coming in 20. All right, take a look at this chart, the monthly. We're going to start here. Quick summary is Wednesday through Friday of this week. It looks like we could get a strong continuation down. However, Wednesday through Friday specifically, any sharp move down likely will be met with a just going straight back from its breakdown point. But a move down Friday or after would very likely mean continuation down, right? If this October candle flips green this week, Wednesday through Friday, it likely means if it goes up, flips green, it likely will just go straight back down from where it broke out. It's not going to get continuation. So I'm essentially summarizing yesterday's video based off this monthly candle. But if after this Friday, this candle can flip green, and the weekly will flip green at the same time, the current weekly candle and monthly candle, that increases the probability that we're going to have a move up to 21K target, which everybody and their sister and cousin are looking at that level, most of them for reasons different than why I'm looking at it. But there is a lot of, using fancy word, confluence or agreement across multiple different types of TA here, all right? Again, timing is so important right now, Wednesday through Friday, because of high impact economic data, namely CPI, PPI, and again, if that stuff is like stupid sounding jargon to you, that's perfectly fine. I mean, hell, I was in that boat thinking I didn't know what it was, and it sounded stupid just, I don't know, probably like 8 months ago, and it was mostly my VIPs educating me on all that stuff and how it gives me a better edge on the market. So right now, in general, based off the timing, there's a lot of uncertainty because any continued sharp move up or sharp move down, it's probably just going to go back to the middle. Very uncertain. That's one layer of reasoning why there's a lot of uncertainty right now, as Bitcoin is essentially falling off of a timing. But after Friday and after, that's when the certainty gets turned back to its normal dials in terms of, is it going to flood down, or is this going to flip green and stay green and do a move up to the upside to 21K? Mixing this with the stock market. So this, what I'm about to show you, I've been talking about on Twitter, posting. I've been posting this for a while, like probably since last year, right? And I've essentially made fun of the analysts on the news who talk about traditional finance more and who keep thinking the bottom's in and we're going to have a reverse on all that. And this whole time, let me go to, so this, what the chart that I'm on is called NASDAQ Composite Futures. And if you see this ticker right here, if you type this in, NQ1 exclamation, hit enter on Tradingview, you'll get the same chart. And I've been saying since, I think, I don't know, probably this lower high broke down. Probably, yeah, it maybe it's only April this year, so not last year, but it's been months. Six-ish months that there's no way a bottom can be in, because line A at bare minimum has to be hit, and it's actually going to be more likely this guy. Line B actually needs to be hit because it's dropping from so high that there's almost no chance that the stock market can bounce from line A. The only way that the stock market goes down to line A and bounces, which this is the most important line in NASDAQ Composite, this is the master origin line. So it like on Earth, it's the equator, right? And this line here is one of the tropics lines, and this here is the other tropics line at 23.5 degrees latitude from the equator, right? And so when you come up from too high above the A line and you come down to it, it always overshoots it. But that doesn't mean at first touch of line A that you can't get some form of bounce to create a lower high. And that is the key to add some, I guess, uncertainty on Bitcoin price, because it's getting very close to the line. And it could form a small, I guess, not a reversal. It's not going to reverse here very likely. It needs to hit this line before it can reverse. Or before it has permission to reverse. Or you have some edge of looking for a reversal. But you could get a bounce where it just, goes up to here. Like, see this height here and height there? It could get a bounce and want to do another lower high before it then touches this line. And if you measure that up from here, that's a potential 12% rally on tech stocks, and SPX would probably do something to that effect as well. And right now and so why this is so important is because Bitcoin is outperforming this chart by a mile. So for example, this right here is a new yearly low on stocks. Let me make sure in the comments y'all can I'm pretty sure you can hear me, right? I'm saying, yeah, saying you can hear me, right? So this right here is a yearly, 2022, a yearly low. And this is a new yearly low put in today, as I'm recording this, this daily closure. But on Bitcoin, the yearly low was made back in June, and it's just going sideways. Bitcoin is, and so because if Bitcoin goes sideways and stocks keep going down, that means Bitcoin versus the stock market, if you were to chart that, which I'm going to pull that up right now, it would mean it's in an uptrend. Even though Bitcoin's not really going up, it's just going flat as stocks go down. That means that chart versus each other, sideways versus down, if you were to chart sideways versus down, that would create an up angle, right? And that is what right here is. So we have a 51-day trend up. So because Bitcoin, let me go to like the 4-hour chart. Yeah, so this is a pretty established trend. And let me make some like my rainbows on it just so you could more visually see the trend, right? And I'll even take off price. So this rainbow is getting above one of the bigger obstacles, and look at price. I mean, it's using this as support, so it looks like it's easily going to come up here to this next to the next dam. So this is a river. This is dam number 1, dam number, we're or not dam, but like a levee. You know, it breaks the levee in a flood, so it can flood the other way. And right now, this trend doesn't look like it's even close to being broken at all. Like it might just be getting warmed up, potentially. But regardless of trying to analyze this, the fact is it's in a 51-day uptrend versus the stock market. So what? So now let me go back to remember that A line, the equator. What's going to happen? Because Bitcoin's outperforming it. When that A line is hit, right here, and you get a bounce, and Bitcoin's outperforming this, you could get a huge bounce on Bitcoin. And look how close it is. It could hit it this week. So if Bitcoin can stay level and just maybe even slideways down, it just doesn't go much below 18.5 or something. You know, it's possible it goes past my 19K threshold. That's possible. But let's say it doesn't, you know, it stays, you know, between, it doesn't go below 18K as this is hit. And this gets that 12% bounce. What's Bitcoin going to do? It's going to bounce a hell of a lot. It's going to bounce more than 12%. A lot more, because that trend on the other chart that I just showed versus stocks, it is a strong trend. And it looks like it might heat up even more to the upside, right? So let's say that going back to Bitcoin here, and again, what I'm telling you, I'm not saying is the most probable. I want you to be prepared for it. Because it's, in my opinion, better to be bearish right now, both on the micro timeframes, midterm, and long-term timeframes. Outside of these lines, Wednesday through Friday, just realize it's going to go up and down, up and down, up and down, and back to the middle. But beyond this, it's best, very likely best to be just bearish on all time frames. Micro bearish, short-term bearish, midterm bearish, and macro bearish. Just bearish across the board. And I think, you know, in a lot of my analysis is showing that. But I want to show you a compelling reason why you need to be prepared for that to be totally wrong. So what YouTuber have you ever seen, you know, tells you their best guess and, you know, and then gives you compelling reasons why that could be wrong and tell you to prepare for it. So my bearishness could easily be totally wrong for like a 3 to 4 week period as Bitcoin rallies to 22K or about 21K easily. And that would be why, because Bitcoin has held level as the A line on stocks has been hit and then it rallies. That makes sense? But without that A line being there, honestly, I think Bitcoin would already be at like 15K. I think traditional finance, who is responsible for about 80-90% of trading volume on, not transaction volume, but trading volume on charts, spot and futures. I think it's very obvious they're propping up Bitcoin as the stocks are hitting some level down below. And I'm telling you, that's the line. That is what is happening, right? Okay. However, right when it hits that line, A line, it could just slam past it, and that's when Bitcoin just floods down. That's possible as well. So I honestly, I almost think that's what's going to happen. It's just they're waiting for traditional finance doesn't want Bitcoin to go too low too fast, and they're just waiting. They're trying to increase the momentum on stocks a little bit more so that when the big flood down comes, Bitcoin isn't already at 14K. So that's holding steady so that when the big flood comes down, Bitcoin has been holding steady and it can fall heavily from a higher point and then hit their targets where they plan to start buying and create the bottom. Does that make sense? Because Bitcoin was underperforming the stock market for so long. And so they're just essentially slowing the pace of the downside move for Bitcoin to prepare for the big sell-off. Because if they didn't do that, then their plans would be ruined because some other person outside of their group or Bitcoin cartel, they would buy up a bottom that would hand control or more control to other big players to decide the bottom, right? Because it is somebody with it's a group or somebody with a lot of money on a market buy who decides the bottom. That is how it works. Okay, I mean, that's literally not always. Sometimes you'll get a long consolidation, like on gold or whatever, right? But on volatile assets, it is a big market buy that decides the bottom. And sometimes it's after a consolidation, but sometimes it's V-shaped, then consolidation, and that was the bottom. Strong market buy, right? So there are two competing theories here with that A line and Bitcoin going steady. There's a bearish interpretation. They're just holding it up because it will flood down, but they don't want it to flood down too far. That's why they're holding it steady. And the case for a bullish bounce once the A line is hit. All right, so I'm focusing on the bullish case here, or the bounce case. That chart is too messy. All right, so let's say that Bitcoin can hold level, like, this is the yearly low right here. So I'm on the, I want to go to the 2-hour chart. Let's go to the 1-hour chart. Yeah, let's do the 1-hour chart. And so this is right here, the yearly low on Bitcoin back in June this year. Stocks have been making yearly low, yearly low, yearly low, yearly low, and Bitcoin has not, right? And if it can hold, maybe even down here, maybe my 19K line is broken and it actually, hits down here, whatever, when line A is hit. If the stocks were to rally 12% and Bitcoin did 12% or more, so that brings you back up to an origin line, and that's almost, can you see in the blue box that says 19.45%? That would be a 20% rally up to the origin line to get rejected by it. And this origin line goes back 13 years of price history. So this is as macro as you can go. Like, there is no more macro than an origin line. Like, you can't, right? So these lines are a big ass deal. And for new viewers, I will just give you a quick snapshot of what it looks like. And again, origin lines are only found on my channel. I made them, and so I just go with it, right? So look, the previous master origin line was, this is still the master origin line, but what is now the master origin line? It used to be the bottom. It used to be the bottom of everything. But right now, Bitcoin, honestly, it looks like Bitcoin's going to hit this bottom line. It goes back to 2011. Kind of looks like what's going to happen. So, and if that were to happen over time, that would be, a bottom of, see, if it took a few weeks to get down there, it could only be a bottom of $16,000, and that might be why the bigger players of traditional finance don't want this to go down yet, because they plan a bottom around here, and if Bitcoin were also making yearly lows, it'd be too close. And as stocks took a final capitulation down, then Bitcoin would go too low, right? Lower than what, the big bad days wanted. This is just a theory. Bitcoin could easily go below this bottom line, this bottom origin line. Really good. But that's a visual. But in the meantime, if line A is hit, it's perfectly acceptable and still macro bearish for Bitcoin to come up here and get a nice retest of this origin line before nice rally up before then coming back down to this point sometime in November. That's completely fine. In this setup, so this 20% move up, I need you to be prepared for that, as on my channel, I've been ultra bearish. If you see the equator line hit on NASDAQ Composite Futures, and again, I'll let you know, right? Hey, this is being hit and Bitcoin hasn't taken a leg down. This is what you'd want to be prepared for. Making sense so far? Short-term analysis, it's all the same from my yesterday's video. For people who didn't see that, I'm at about 6:30 right now. I need to end this portion, but if you want the bumpers of what to look out for, and honestly, I can get rid of that. If you want to know what Bitcoin will be interacting with in the short-term time frame, especially during Wednesday, Thursday, Friday of this week, because it will be volatile and it's just going to go both directions, right? It's just going to go up, down, back to the middle, up or down, up, back to the middle. Let me try to put on my chart what I would say you will want everything that I'm getting ready to label. These are all the things that are in play, and they are, where's the September? Right there. So everything on my chart, right? Is the weekly tenant play? Let's see here. it might be in play. Let's see. Might be a little too high. Maybe. But for the sake of this, I think everything on my chart right now, which is either labeled by a price box or by words, right? Right here. So Friday at 10 a.m., everything between this vertical line and this vertical line, if you see violence to the upside, that won't be continuation. If you see violence to the downside, it probably isn't continuation. But the closer you get to Friday and or beyond Friday in this direction, if you get violent moves down, the chances of continuation in that direction are increasing as you get to this point, right? But on Wednesday and Thursday, if you get violent move down here, there's a stronger chance that it'll just go straight back to the middle where it broke down. But the closer and closer you get to here or past, if you get a move at that point, strong move down, then the chances for continuation in that direction are increased. So this line is in play and this line is in play. You need vertical lines on your chart because most of everything between between this line and this line, it's likely fake outs. All right. But after this line, very likely continuation or somewhere close to this line. And then from a horizontal standpoint, you need the September candle open right around 20,000, The October candle open is going to be a bumper. Price will interact with that and move. It'll pivot some way, right? And then you need the daily 10, the 4-hour 10, and these two boxes. So let me zoom out a little bit so you can snapshot this and you could try to replicate it. I could probably get rid of this. You could maybe get a wick down there, but this is more. These are all the things that are most likely going to create pivot points and be the bumpers. Like, price hits it and it does something. But between these, price will just go straight to the next one, right? And there is a possibility that Bitcoin, it does fly above the 4-hour 10. And if it does, well, then you're probably going to, interact with the October candle and the daily 10 at the same time and get rejected. And to go above it, you have to form a higher low. And if that happens, then you're looking at 20K. And if it happens between these two lines and 20K is hit, guess what's going to happen? It's probably going to come straight back down to the middle. So just use this. This is your guide. For sure. And don't forget the importance of these vertical lines. And if you want to see a more in-depth analysis on this, then look at my Bitcoin video from Monday, 10/10, October 10th. And that's the Bitcoin portion. Hopefully you find this helpful, and hopefully you understand why it could go up, could go down, could go sideways type of analysis, and it's very important because you can get your ass kicked from between this time axis. You just get slaughtered, especially if you're pissing around with leverage. You can get so slaughtered. So money that you don't lose because you're prepared for wicked shit to happen, that's money you win. And that's why the analysis of could go up, could go down, could go sideways is so important that noobs don't understand. All right. That is Bitcoin. Let's move on to